Oh, hello. Hello. Good afternoon. Welcome to another streaming video of ES Futures Trading. Today is Sunday, September 17th. It is 4:59, 5 p.m. Eastern Time in the United States. I do these streams, these videos, as a way to keep myself out there, put my voice out there, also to organize my ideas, verbalize my thoughts, and try to have some way of whether some accountability in what I say or what I think about the markets. But I trade, the only market I trade, the only market I am interested in trading is the ES. I am a futures trader. I do not trade stocks. I do not have another interest in another future. I may see the Nasdaq, what the Nasdaq, Russell, or Dow are doing, but I don't trade another futures. I don't trade gold, I don't trade dollar, cattle, orange, nothing of that. My only focus is the market. My only market is this market. My focus is this market, which is the ES. The reason why I do that is because I believe this is by far the biggest market, the one that has more liquidity, the one that is broadly used. And because of that, I believe it is harder to manipulate this market. I'm not saying it cannot be manipulated, but it is harder. Okay, let's do a little review of what happened Friday. Let's start with volume. Check the volume that we happened Friday. We were talking about this volume, how the volume was, the increase was kind of, I don't see this kind of increase quite often. It was systematic going higher. I don't see, if you check this bar, you don't see that. This is unusual. And these kind of spikes tend to happen this day, but man, it happened Friday. And if we check the volume, let's check the volume. This is a regular volume, right? Normal volume for those transitional periods when one contract officially is dropped out of the window, right? And there is no more September contract here. Just this day, Friday, I'm talking about, starting from 9:30 a.m. At 9:30 a.m. on Friday, September contract was over. There was nothing there, nothing more. It was you have to deliver it if you have possession of any contract. If you have a short, you have a long, you have to deliver that day. But the rollover of this contract happened, I believe, I would consider last Friday. It has a huge increment. It went from 200 or 300 to almost 1 million. Monday had like about 2 millions. Where do you see that? You use the website. What I do is I use the website, the official website of the CME, which this is the official numbers of the ES. You can find here also Nasdaq, all the contracts that the CME has, right? And okay, Friday. I cannot see Friday now, but if you check Monday, the September contract I still have some amount of volume, right? But the December jumped really high. It went from kind of double. 2 million is a lot of volume. It's a lot of volume. And overall, the market traded almost very close to, kind of close to 4 millions here. It's still, this is a good volume if it was only one contract, right? This is really, it would have been really nice. But it has two. And from this day, it started to decline. This is September, declining. But notice what's happened with December as well. Both are declining here. Really low, keeps going lower. This is unbelievable low here. This December contracts are really low. This is something, I mean, by itself, it is nothing. By itself is nothing. But we have to put things in context. Right? When we have that kind of volume, what's happening in this market is, and that's why we have our time frames here. 1, 2, 3, 4, 5. This is Friday, this is Monday. Notice that this is a gap here, but this is a fake gap. This is not a gap really. This is just an adjustment that in this case Thinkorswim does, because so you can have a continuous chart, right? Continuous chart that comes from forever, and it doesn't have cuts here. It doesn't have you kind of overlap one contract over the other one, and that's why you have this gap here. The same thing happened here. Here, in this case, this gap happened when the market was doing a breakout in the weekly, breakout in the monthly, breakout in the daily as well. Okay? All time frames were having breakouts, and now this gigantic gap doesn't have the same meaning as it has before. If I put one contract over the other one, let me see. I have it here. I have made it here. Like, this is the average contract, and this is December contract. Notice what? Can you see this gap here? What it is here? There's no gap here. There's nothing here. Right? And as a matter of fact, what I can see here actually is a trend line has started to form. The same way how we have a trend line here to the upside, the same way we have a trend line. And we were talking also on Friday about how traders are sometimes so fixated in some things. That's how the human brains work. We talked about this as well before. When you go outside and look up to the sky, if there's any cloud, you will find a bear, or a cow, a sheep, whatever. I can find my uncle, my dead uncle there, my dead aunt. Oh, that's a sign. The heaven is, the universe is sending me a sign. We live for patterns. That's how human brain works. That's how we last this long, because we love to see. That's our instinct, has been honed that way. The ones who didn't see pattern didn't survive. They were hunted, they were killed by lions, beasts, or whoever, or whatever. Right? We are the descendants of those. Those are our ancestors, and that's very useful, right? But in trading, is a killer, right? But what I am saying here is, what do you see here? Right? Now, I said, okay, wow, this looks this looks like a head and shoulder here, head and shoulder. That's called a call, right? Head and shoulders or something like that. And sometimes this is just traders are so fixated on something that this is what Nassim Taleb calls, or Nicholas Taleb calls, there's so much pressure from traders that it just becomes a fulfilled prophecy. What this pattern means? The pattern is if the market is up here, the market will break all the way down to here. That's basically what this says, right? And But we don't do that. I don't do that. I don't care about those things. It is just worthless. What I was saying, what I was watching is this pattern, this trend here, mechanically selling from exactly. You can place a line, and we will talk about this code in this day on Thursday. Man, this can be, there can be some play here to the outside just to break out here or to get all these highs. What both options, both scenarios, both were and both possibilities were there. And what's going to happen? I don't know what's going to happen. And I don't think nobody else or nobody knows what's going to happen. If somebody knows, please let me know. Right? But this was quite peculiar. A gap, a fake gap. Gaps are sign of change. In this case, positive. Market is going to the upside. But we can see that this actually is not a gap. It's just a rollover. But traders are fixated on that. It's one thing trading above the 50 moving average, but the market doesn't even take the 50 at this time when this happened. It was sold from the 50 level and now it's back in range. Just like that. And now you can hear that, you can read, or you can watch the news. Oh, this is a bull trap, okay, blah, 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 blah. You will see a lot of things now. Everybody's negative now. Right? I didn't see much here. I didn't see much. There's something expected to happen. It could have happened to the upside, but it happened to the downside here. What I see is a market. In the bigger time frame, we got this big range, 13-month range here. The market has breakout above that range. It didn't come back inside. It's still a higher. The trend is to the downside. The market is going to the downside. The last 3 months, the market is going lower. You can see here, lower. It's going lower. But it's still above this. If the market comes back too close to this low during this month or the next month, the good odds the market can come back inside this range. Coming back inside this range, 2 things can happen. The market can look below and then just rally towards this high. Notice that this high doesn't have excess. Or it can travel to the opposite side of this range. Nobody knows. Those are the scenarios for a market that is in balance. Right? That's breaking out the balance. We can break out the balance and come back, which targets the opposite side. Or you can have done some continuation targeting the opposite side of the range. The thing is, there is a range here, but that's a monthly time frame. Okay, that's a monthly time frames. Monthly time frames take months to develop. Remember that, months to develop. That's why it's called monthly time frame. Monthly here. The weekly paints quite a different story. While the monthly is going lower, the weekly is going higher. The majority of participants in the weekly time frame see this market as a positive market. The market is going higher here. Can you see 1, 2, 3, 4 weeks in a row? This market is going higher. Notice, however, how this trend into the upside is inside this range. We have a 4, 8, 12, 14-week range here. The market is trending to the upside, but inside a range. Right? You can call that I could call this a range. I could call it a range. Other people can call it this is a trending market. This is a rally, it's a pullback, it keeps going higher. Both the scenarios are, I think I can argue for both of them. It is important for us to have an opinion, a personal opinion of the market. We can be wrong or we can be right. The thing is, if we are wrong, we will make the adjustments. While if I blindly follow what somebody else says or does, I won't be able to make the adjustments. I won't be able to learn from what I am witnessing that is developing in the market. the daily time frame, this was very confusing, right? There was a lot of things. I don't like the weeks like the one that had happened, just because there is these two contracts. There's so many things that happen. Weird things can happen, and I try to stay away from the market when this rollover period happens. Friday was quite a day. I was expecting something. Something no, I guess expecting is a really bad choice of word for what I'm trying to say, because that's general. There's a bias implicit when you say that. And but I try to be neutral. But when I saw that 17 wide overnight low, wow, okay, that was crazy. That was crazy. My traders saw the market rallying the day before, and that was a trap there. And what I'm talking is about. Let's see if I can call the overnight. Yeah, I was talking about this overnight. Look at this overnight here. How many lows it has? If you count these lows, you can see this market being bought up on around this area. You can call it last, right? An area trying to go after traders saw this market going high. Oh boy, we are going to the moon now. Of course, we're going to the moon now. And this is I had a bias here the day before. You know what I mean with this? I saw a lot of absorption here around these levels. The market came back here, and just volume came in. It was impressive, the amount of volume that came at that level, at the 50 SMA. And what was the 50 that day? The 50 SMA. And it was just crazy. It was just crazy. Anything can happen. When you see absorption, you can say, okay, this market has potential to keep going higher, because there is some interest there. There's some interest there in keeping the market higher. Next thing I saw is there was tremendous. When I opened my histograms, I saw a lot of volume. A lot of volume that came this day at that in pretty much every other period. We have thousands of blocks, right? So one transaction that have over 1,000 contracts on it. If somebody wants me to see, if I can see that, everybody can see that, right? So, and the question, what I question is, if somebody wants me to see, I don't want to see it. The next thing is, who will be buying or selling a contract that is about to expire, that has less than 24 hours to expire? Because the transactions were not in the current period, in the current contract in December. Those transactions were made in the September contract. Okay, that was one thing. It looked to me like there was some, there's a lot of games that I played, and it looked to me that was somebody was trying to pin the market between certain levels. That's why I observed this here. What happened here? All the loans here were liquidated, were forced to liquidate, were squeezed here the next day. And what the market did here, you got, remember, Monday was the day with high volume. You got Thursday, Wednesday, Tuesday, Monday. Friday also have some. So, and the market had formed a range, 6-day range here, 6-day range here, and there is a breakout to the upside of the 6-day range. The breakout closed the gap, and the market come back inside this range during this day. And the next day, the market didn't get out of the range. When this happened, the market come back inside a range. That's a fake out. There's a look above and fail, and the potential destination is the opposite side of the range. It doesn't have to happen the same day. Remember, when the market came back inside this range, break out to the downside, come back inside this range, it took for the market 1, 2, 3, 4, 5 days take the high out. The same thing happened here. And also we have the 4,500 right there. And these levels have some kind, there's nothing there really actually, but traders see that as areas of value. Some of them have, some of them not. And when identifying when it has value or when it doesn't have any kind of value is important as well. It is relevant. I'm going to put settle here. Settle, the market settle 44.98. 44.98 on Friday, and last 44.99. It's pretty much the same. You can consider this the same. 4,500. This poor, high, poor, and weak. Now, this poor has been repaired. There's not a reference. This one is history as well. This one is history as well. It doesn't matter anymore. It's curious, right? It's curious to see how this is a reference from September. These are not valid anymore. But notice where it stopped. Notice where it stopped. I want to keep there. I want to see what the market does today. I'm very interested in see how the opening develops over the week, I said, in about 30 minutes. This is 9:15 low. Questionable? No, not questionable. Kind of mechanical. The week's highs, and this high is history as well. This one history doesn't matter anymore. This one doesn't matter anymore. There was a late 9:14 rally high. It was an old contract. This pullback low has been recent. These kind of things are very important to me. This pullback low, because the market is going high and there's a pullback low here. Everything that happened here is, is voided when the market trades through that and builds value below. If I'm going to say something like that, is there something like that today on this profile? I think so. I guess I would call this, but not a pullback. I would call rather these three versions closed. Lower distributions closed. Because this market has two distributions here. Another one here. And this distributions, this market has three distributions on Friday. And why I do that? Because I consider each distribution as a separate day. The market closing this distribution here, closing this one, this day is history, this one is history as well. Closing this distribution targets this upper side. If the market has a rally here and cannot close this distribution, it puts the lower back on side again. And the same thing happened here, and the same thing happened here as well. I guess this is more relevant to me. I'm going to call this is really nice high, has nice excess, 915 high. But can you see something here? Can you see something here? What is the nuance of this high here? It's right at value area low. It's kind of weird, right? It's just kind of, maybe it can be coincidence, but this whenever I see some selling coming from this, as was this case, it puts some doubt about the action, what is happening here. This could be the action, or this can be the action of very short time frame traders here. The 50, where is the 50 now? Let me check that again. The 50 is 45.52, 6. Yeah, let's call it 45.52. Oh, now I can fix that. This just, it doesn't matter. 52.50. That's the 50 moving average. What is the 4451? Is the 100, 4451. Where are you? 4450. This is not. It's here. 51. These are reference. This daily halfback here. These are not good. Those two were the previous contract had this one. This day as well was sold on halfback twice. This low, 1, 2, 3, 4, 5 days here, right? Friday, Monday. This profile here, this market doesn't have enough volume here. Okay, doesn't have enough volume here. There's no volume here. The only inventory is very much short here. It was long. It has some longs here. Get longer on Thursday. That inventory has been liquidated, but still, it is short. It is very. I think it's very short now. It's very short now. It may have some downside continuation because this low was here. This low was held back at the time before this extension, the market had bounced extension. This low as well, E low, was held back before the market had this upside extension here. So these two are very questionable. And Friday, the market made a low. The daily low is right there. So these ones have not been repaired. And if you check where this low is relative to the overnight session, seems like, yeah, can you see? It is pretty much this low as well. So this low is very questionable. It has excess though. It has excess. It has not an impressive excess, but it has excess. This market has excess here. All right, we have a spike to the downside here. We have another spike here that was rejected. Friday just took all that weak long inventory out. All that has been repaired. This day it doesn't have too much volume. So what happened here are just references. And the most important thing I think is the 400 and the distributions that we have this day. We might have some sideways trading and continues. It breaks towards this non-excess low down here. That's what I see from the market profile. Now, what do we have for an index for the next week? For the week that is starting, the week is starting in 30 minutes. Oh no, this I don't need. I don't need to have that. I need to have here. There is. All right. What we have here for the week, schedule for the week, is check FOMC. Oh, we have FOMC, huh? Look at that. FOMC on Wednesday. And Fed Chairman Powell first conference at 2. This is what I am watching this week. FOMC. This one too, PMI. I don't know what the heck is this. Jobless. This is the weekly. This may have some, just a little bit. And the bigger the arrow, the more relevant it is for me. Okay, I pay special attention to what Chairman Powell has to say, because there is a press conference there. And what I do, I add that to my homework. You know? When the reason why I do this, one of the reasons why I do these streams is when you talk, when you do your homework. When I do my homework, for example, I have my homework here. When I do my homework, the fact that I am writing, I should write by hand, but I use a computer, I use a keyboard, right? When you do it by hand, it sticks to your memory. It sticks to your brain faster than when you do it by a keyboard. It is just two actions there. You are using two sides, two parts of your brain, one from the reading, and the other one from writing. And when you combine those, the power, the strength, the power of retaining the thought or the activity that you're doing is higher. You retain the information higher. And what I'm trying to do when I do these streams, when I post on Twitter, when I do my homework, is I see the market, I take notes, and it's easier to recall that later in the session or during the week. When I started to do it, it was really hard. It used to take me such a long amount. It was really hard to do it. All right, and it used to take me 2 or 3 hours to do it. What you see here. And now I have my homework. From here to here, not much, right? Not much. And when I did it, of course, when the market opened, everything that I have right, everything I had acknowledged, they were just thrown out of the window. I didn't remember. I didn't remember. That's how the things work. Until you do it over and over and over and over, and these things start to stick to your brain. Now I can be aware when the market is trading, when I'm doing my daily observation, when I'm placing any kind of trade, or just watching the market, what the market is doing in the intraday, or during the intraday, during this time frame. What I realize is I'm aware. I am aware, a little bit aware of what the market is doing in the bigger time frames as well. What's happening in the monthly, weekly, daily, what are the odds that certain scenarios can to develop during the day, what can happen if this happens, what happens if this doesn't happen, for example, right? I try to remain neutral. That's a constant struggle the one has, trying to remain neutral, even though all the information that we have here on Friday, they were pointing to the downside. So try to remain neutral is really important. One of the most important skill to acquire or to develop is recognize the direction of the market, what the market is doing, what is the direction the market is trading today. One thing that can help is doing your market profiles by hand. It is a tedious, extremely tedious activity, but I try to do. That's how I try to do. When you do your profiles by hand, you calculate value area, you calculate where halfback is, where POC is, and calculate value area by hand. It helps you. It helps to understand a little bit more how the dynamics of the markets work. Right? We see, for example, what in this day, what the market is doing here. Market is going higher. Market moving higher. Even though you have this low hill below this, the market keeps going higher. Right? Keeps going higher. It's the first thing I realized is it helped me to find the direction of the market. Oh, okay, the market is going higher. But it's just quite a simple thought. But the process to get there is something, right? Why I say this? Yesterday or Friday, for example, I was trying to get short here. What is the opportunity to get short here? There were several opportunities to get. On Thursday, there was only one for me to be long here. On Friday, there was multiple times the market gave us a chance to get short. One was when the market come back inside this range, inside the 6-day range. The other one when the market re-entered this range here. This one here, the market. Then when the market make a double high, double low here, then the next one, this one was risky here. The one that has less risk than this one, believe it or not, was this one, when the market did not close the distribution. And finally, when the market took this high, this low out. No, understanding, you need to understand though, the risk of taking this way. You need to have a very, very, very tight stop here. Here as well. Here, the stop is closing. As soon as the market closes this distribution, that's a sign that the trade is wrong. It's just wrong, right? And the odds here was just very, very short trade here, aiming to the 4,500. Just that, nothing else. It may come lower, but that's good, right? But this was the destination here, the 4,500. And we talk about that in the stream and also on Twitter. Now, for the upcoming week, we have now a market that is back inside the 6-day range. The potential destination of this trade is the opposite side of this range. I have to acknowledge that this market is very short, but it has 4 distributions now. We have one here, 1 day, 2 days, 3 days, 4 days to the downside. It may have some continuation towards this level, or may have some sideways trading around back and forth from the 4,500. We don't have much now. We don't have much inventory, because when this is something also that we need to be aware of. Every market, or when I say every market, I say this market has been trading multiple ways, at least 4 or 5. We've had 4 or 5 markets in the last 2 years. And each market, I'm talking just about the ES, right? This summer market is very thin. It has been very thin, low volume, and the market has been moving towards the areas where the volume has been concentrated. What I mean with this is, no, this. I guess I have it here. Yeah, I have it. Let me open this. I'm gonna show you. And we need to change with the market. Notice this is the current contract. Notice, for example, how much volume you have here. 300. Well, 300. That's nothing. This is something. You have 40, 50,000 contracts traded here at these levels. And that's why I had it highlighted this on Friday. The potential destination of this trade, if there's no volume, the market would move towards this. There is supply here, there's volume here that can fuel any kind of movement. And notice how this day develops, right? There's one form. Can you see this histogram here on the upper side? And another one down here. Even 3 here yesterday. And you can see that we have 2 distributions, right? It has this shape. And these are little nuances that we learn. This day from here to here has something like this. I want to exaggerate something like this here. From here to here, you got another one. And from here to here, you have another one, right? Areas of volume. This one being the biggest one. We were talking about how once this area is taken, if the market is going to go lower, it needs volume, because there is nothing here. Okay, there's nothing here. And guess what we had on Friday? Do you remember? What do we have in Friday? We have tons of volume. Tons of volume. Very tricky though. Okay? Very tricky. This is not easy. It's not easy. Don't miss and don't. I'm not trying to say this is easy. This is super, super hard to understand, and also if you want to trade it, you got to be aware of all the things can happen here. But if the market is going to trade towards this area here, all this area here, notice what the volume is up here, right? This volume was taken during this day. Nothing here, there's nothing here. Now, if the market is going to trade towards, it needs volume. Now we have volume here. What else do we have? We have volume in the upper side. This, I am going to carry this piece of information because that's the way how this market has been trading. Right? The past 2 or 3 months have been like that. I didn't realize that until maybe a couple of weeks ago. It made me remember of Pete Steinmeier. I saw one on his videos. On one of his videos, he says, I have successful figure out the market 5 times. All right, and that little piece, it was very interesting to hear that. I didn't understand at the time, the first time when I figured out the market 5 times. So it just tells you that the markets are constantly changing all the time, and we need to change along with the market. We need to be adapting, improving, doing new observations all the time. That's one of the reasons indicators don't work for me. That's why I think being so reliant on indicators is just because indicators is just a picture of what happened, What we see here, what we can see here, for example, what we can see from market profiles is when we use our charts or daily time frame charts, all this stuff, is we can read what happened before. But doesn't matter. What happened has happened. What will happen hasn't happened yet. And what matters is what is happening now. Okay, the other stuff is irrelevant. It doesn't matter. But we need to keep that information handy. We really need to keep that information handy to understand what is happening now. That's the key. And all of these labels that I have here are just used for references. This is for reference purposes to monitor what the market is doing. I don't know if I want to see if I can replay this data. Let me see if I can give you an example. I'm just thinking of that. Okay, let me see if I can play a replay. Or if I can replay this. I can replay Thursday. Let me open the replay here. Replay is a chart. I don't have too much data on it. I'm going to use the current contract, the date, the 14th. The 14th. The 14th data, new replay. I'm going to play here the 14th. And I am interested in the last period. Select time 15. I'm just interested in the last period here. Because I want to show the absorption that happened here, which was relevant for what happened before. After. Okay, it's not charging. Huh. Oh, here it is. All right. We are okay there. I'm going to drop this to 5 times. Let's see how it plays at real time first. Real time is up here. Notice where the market is open. Traditional trading, you can interpret this in 2 ways, all right? Selling is very mechanical. Selling is very mechanical. The last thing I want to be here is long. Short, my bad. The last thing I want to be short. It's very crazy. This market can have a huge spike here out of this. The previous day, the market did the same, and we have a tremendous development to the upside, towards the upside. What happened here and during this day is the market has a breakout. Market has had a breakout of this 6-day range, right? First breakout of this day, then this day, non-excess, then the 6-day range plus a gap. There is a gap somewhere here. Now this market has closed. What do we have upside for continuation? Upside continuation doesn't have much. There's nothing there. It needs volume to keep going higher. And the market did not have volume this day. Thursday, no volume. A little bit higher, but irrelevant. I mean, for the rally that market has had so far was irrelevant. Now I'm going to speed this one up towards the closing. Okay, now we have a breakout, and we are going to have a breakout. We have a spike to the upside. That's what I was thinking. Many people were thinking that thing as well. Why? Because it's happening here. Now, it's of course the market is going to keep going higher, right? But you need to remember, this is a challenging time. When you have 2 contracts, one contract that is about to expire and the other one is taking its place. The big spike was very low here. No excess in the high. No excess, no taper here. Let's keep going to 30 times. I might make it faster here. I am interested in M. Very close to the closing, actually. Very close to the closing. The last 5 minutes. The amount, and you don't see that often. I mean, you can see, for example, just pretend this period is M. You can see the market going lower. Okay, let's see if it stops there and it tries to go lower. It went lower. Notice where this low is. Halbach. It tries to go lower, and when it closes, usually it goes back and forth around some certain level, but the volume doesn't increase. And this is why you have to be present in the market to become familiar, right? What the observations do is you get familiarity, you gain familiarity, you learn what tempo is, what a good tempo is, what a good pace. When the market has confidence, you learn what a good volume is. You start to see it, and you see it over and over and over until you learn. 51. I'm going 52. I'm going to drop it to. Let's drop it to 10 here. Okay. Notice here 2 things. Volume. POC didn't move higher. When the market was going higher, there was no way that POC was going to move higher. That was impossible. It's just too wide now. It was too wide. And JKL make it too wide. It wasn't going to move higher. So this could be probably excess now. Now, notice where this selling is coming from. Exactly from Halbach. Halbach. This was. And what happened in the overnight? Remember. You remember what happened in the overnight? There was a lot of buying that was coming from around last, which I think is seems like it was El Halbach also. Around that, this is a breakout, the high, around this level. There was a lot of buying. No, it was around this level. Oh, come on, I missed it. God damn. I miss it. I miss it. Oh, let's do it again. New replay. This time, make it again 14. This time, I'm going to make it 1550. Okay, 1550. I don't know replay that much. And these are the things. Do you know how I miss this replay? Those are the things. That's why I don't do too much stream now, because when I talking, I noticed that I was missing actually. I'm missing the trade. I'm missing my opportunity. Notice how volume dries here. Now it dries. It has nice taper on the upper side. Really nice taper on the upper side. High volume here. The same thing that happens in the bigger time frame. This is daily profile. The same thing happens in the intraday, in the weekly, and the monthly as well. Taper on the upper side. This is a little bit crazy here. I want to see 53, 353. And what I saw here by itself means nothing. It means nothing. Oh, okay, that's a good amount of absorption that I have there. Okay, I got that piece of information in my mind. Okay, there could be something here. That's something before what I probably would have thought is, okay, there's something here to the upside. That's what I would have think before. But when time, it loses your linear, okay, I try to remain neutral. Okay, there is something here. There is something that can happen here, that can come out of this action. What is going to be? Which direction is going to be? I don't know. Notice how the volume now has increased here. It came back, was bought right from this low, okay? One tick from this low. One tick from this low. More volume being accumulated here around PSC. These longs now are liquidating. I've been forced to liquidate. Notice how close it comes to this low here. This time comes 2 ticks, right? 2 or 3 ticks to this low. What I remember from this day, it came down right to the low, to the very low. This replay it did not come. It came back 2 or 3 ticks from this low. But I saw it coming right to this low. A huge amount of volume just coming, boom, feeling like crazy. Stopping, you can see you can see this volume here, for example, developing, like just rising, like that. By itself, mean nothing. But what happened afterwards, that's that's when it starts to gain relevance. You start to see the relevance that you can give more weight to certain pieces of information according to what the market is doing. The market never is going to tell you. It's going to let you know what it's doing. That would be too easy. That's a dream. Sometimes you can read. Sometimes are easier to read. Other times are not. Now, let's go back. Before, I am totally neutral here, okay? Because what I see is a market range here, range up here, and the market building value in the center of these two ranges. The market has looked below or inside this range, has failed, has looked inside this range, has failed, and it's just building value here in this area, here, above the 100 and below the 50. Very mechanical trade. I don't have any kind of bias here. I guess the market needs more information You know, when you have ranges, the market is just, you know, I'm suffering the message that you're having from this kind of markets is the market needs more information before any kind of directional move. And I think that's what the market is doing. Let's check now. I always like to check what Jim said in his YouTube channel, because he posted a weekend update. Let's check it out. Oh, here.
Good morning. As a refresher, we differ from traditional technical analysis in that technicians spend most of their time focusing on price. We focus on market-generated information. The basics of market-generated information are time, price, and volume. Price advertises opportunity, time regulates all opportunities, and volume measures the success or failure of those advertised opportunities. Said another way, we put context around price. There is no real learning or understanding until you can view price within its context. The two most important trading guidelines we use are balance and excess. When you look at the graphic in front of you, you will see that there was a multi-day balance prior to Thursday's upside breakout. When we look at balance, we then look to see, does the breakout fail or does it show continuation? Thursday's upside breakout failed dramatically on Friday. At the time of Thursday's upside breakout, there was no excess on either extremes of the multi-day balance. Coming into next week, there is an excess high, an upside breakout failure, and no excess on the low of the 8-day trading range at 44.8350. An inspection of the profile will make this statement clear. The odds favor testing the multi-day trading range low, the same way the odds favored testing the multi-day trading range high on Thursday. 44.8350 is next week's go, no-go reference. Any meaningful downside continuation will see price acceptance below 44.8350. Like the trading range high being a go, no-go level on Thursday, 44.8350 is the same at the opposite extreme of the trading range. Have a great week and good trading.
All right, that was really nice. Nice to hear. Now, what Jim was talking here is about the excess that the market has. And that's why I say it's very important that you develop your own process of thinking and analysis. Right? We'll talk about what the heck is this? Oh, here. About this range. Right? Remember the last week I had this range highlighted and this range highlighted as well. Now I have another range here. No, this is a breakout to the upside, breakout failure. The breakout has failed. And the market at this moment in time, during these days, this 1, 2, 3, 4 days, 3 out of 4 highs were weak, either weak or poor. And we also talk about that. I guess I guess I put something on Twitter about that as well. We have 1, 2, 3 lows, 3 highs were weak, and 3 lows, 2 out of 3 were weak or poor in the lower side. The market has corrected the weak, poor reference on the upper side, and now, but he's explaining that he gives more. He has kind of odds, bigger odds, better odds of this market testing now that this low. And what that is because we have the market has failed this breakout here, and the potential destination is this low here. All right. It may take, as I say, it doesn't necessarily has to happen tomorrow. We may see some sideways action. Remember, these are traded like 3 different areas, 3 different days, 1, 2, 3, including this one. All of them, what's happening? You have one day to the downside, distribution to the downside, more distribution to the downside. You have a 4,500 here. And wait a minute. Oh, and there's distributions here. The 50, he has this 50 here, the excess in the upper side. We have excess here. You have excess in this lower side as well. But this excess, that's why you use market profile. You can see it, what is below. You can see what you have below. It's a progressive view to the downside. Oh, the market is open now. What is happening here? Is this? Oh boy, this is. Come on. This is such a weak opening here. Okay. And that view, the form home, the way how Jim sees the market, right? You incorporate market generated information, incorporates time and volume to price, not just price. No? Doing this kind of analysis, just looking what is happening here, buying the head and shoulders or RSI or whatever. It's just incorporates just price. Only price. When you realize, I was frustrated so many times when I wrote him about what my frustrations were. Right? At his answer, his reply, quite often were only, you are too much focused. You are too focused on price. And I didn't realize how come I am focused on price. And you're just, it is something that you the thing is, you cannot see. You cannot see that you are focused on price. In the same way as when you are, I guess when you are an alcoholic, you say, or have some kind of addiction. You just don't understand. You have problem. Right? You don't see it. And I didn't see it. I am a little bit in the clear now. That's the goal, to improve every time a little bit, 1 bit at a time, the 1% rule. You can read this book by James Clear, Atomic Habits. The improvement, the 1% improvement is very nice. You don't expect to improve. Sometimes we want to improve by huge margins. It is just, we are just putting too much pressure in ourselves. And we need to allow us some room to grow, to fail, so we can learn. Okay, now we have a really, what's that? 5 points? The references in the upper side, we got this one here, closing this distribution. The the overnight session doesn't have too much volume. I don't trade the overnight. It is a completely different market, a different way to trade. All right, it is very, very different. The same rules or concepts that I use or we use in the regular trading hours, unfortunately, does not apply to the overnight because the volume is very low. Understanding what happened here can help. If you trade the overnight trade can help. What's happening, what the potential destination can be, or what the risk we are taking, how high the risk it is, or how low it is if we incorporate that from market profiles, from the regular trading hours, it can help. I believe it can help because there are people that just trade the overnight, either because they have works or just live in different time zones. Okay, I think that's it for today. I will try to come back tomorrow before the opening around 8:50. There is, again, let me check this. There's nothing tomorrow, nothing scheduled, nothing relevant. I didn't check if there's any kind of earnings usually take maybe 3 or 4 weeks from now. We are going to start having some earnings. But let me check it just in case. Earnings Whisper. That's what I use. No, we don't have much. We don't have pretty much nothing. Next week, look at what we have. Tuesday, Wednesday, Thursday. There's nothing here. Nothing of relevance. And we have seen the schedule, the calendar. Come on. Okay. Building, fading FMC. Yeah, there's not much. So just mark it down. FMC. Maybe jobless on Thursday. Not too much. It's just the weekly. And it is counterintuitive because the weekly is what the bigger investors look at, that number. But traders pay more attention to the monthly. The monthly usually happened last Thursday, last Friday, or not last Friday, the first Friday. The first Friday of the month is the report of the previous month. All right, and unless you have any questions or comments, that's it for today. I wish you guys have a wonderful start of the week. Stay safe. Enjoy the rest of your weekend. Bye-bye.